Today, it's Edwin's Monday evening property rant. Hello again, it's Martin North from Digital Finance Analytics, one latest post covering finance and property news. Yet another Monday evening, and of course, Edwin is back for another rant. Hey, Edwin, how you going?
Martin, I am as snug as a bug in a rug. All warmed up here. Just got to furnish the new studio that we've been renovating, and now sooner than later I might have a studio as good as yours.
Well, yeah, be good. Hope you do. For those not seen it before, here's the DFA studio in all its glory with Edwin over there and all the other stuff going on. So, yeah, it's functioning pretty well at the moment, but it took a bit of time to get going. But I have to tell you, Edwin, there's a lot of people running around in ever-decreasing circles at the moment, in my view.
Yeah, I think the ones that are running around in circles a lot more are the left and the right wing parties. So you can show the viewers what we mean by running around in circles. Old policy with a new bent, as they say. There's nothing new under the sun. You just go to give it a different twist and add a different word here or there, and booyah. But at the end of the day, you and I know, where all this is going, and it's announceables. More announceables to keep people happy. The question is, Martin, is how many people are going to fall for it this time around, or are we going to see a move to the independents? Are we going to see a move away from the majors? Because I think people are waking up to a lot of the BS that's happening, and we're finding more and more that what we've been saying, it's the left and the right wing of the same vulture that are just taxing the everyday Aussie.
Well, it is interesting, when I draw a parallel here to the UK, we have an election campaign running at the moment, and the latest surveys show that more and more people are completely skeptical of both of the major parties, because both of the major parties are ignoring the fact that overall public spending will have to be cut dramatically in the future, given everything that we have here in the UK at the moment. Neither side of politics is wanting to talk about the big issues, so they're talking about other little things around the edge. An extra few hundred teachers here, or a bit of medical treatment there for the dental sector and things like that. But the critical structural issues that and I know and everybody in Australia knows are actually things we should be talking about. Nobody wants to talk about them. And I think that's part of the problem. It's amplified by the way that social media works. So a lot of those critical issues are not getting covered by any of the mainstream at all. And the only way you see it now is on social. And of course, the question is, with social stuff, what is true, what is not true? And I guess what we try to do here, Edwin, is provide a perspective based on deep analysis and understanding, but also trying to paint a bigger picture of what's really going on.
Yeah, look, and this is it, right? And we can share different news articles. We can talk about things that are being discussed in the commentary, as you said, from the mainstream media and with their bent, and we can try and break it down. I mean, the last week we spoke about Chris Mintz's push or announcement of the expenditure of $450 million to buy 40 build to rent homes for residential work for essential workers. Now, I put out a tweet from our podcast, and I cut that section of it. I put it out, and I said, Chris, hey, why wait 4 to 5 years to have these apartments built so that the essential workers can benefit? Why not buy them now? I mean, Dusty and I are happy to broker the deal, Martin. We're happy to broker the deal at 0.1%. As a matter of fact, because 0.1% of $450 million is nothing to sneeze at, and it's better than a kick in the pants. And I'm happy to buy it. As of now, I can pull together 560 apartments, and I still have change left over from the 450 million. But as we said last week, that is not the purpose. Right? It's about building committees. It's about forming committees to see most of this 450 million, or a large part of it, large chunk of it, go to committees that are going to decide which palms they're going to grease. And so this is the thing. But there's, as far as I can see, there's a lot of property for sale in properties that have been put back on the market that were bought off the plan in Melbourne, and that's freestanding houses as opposed to apartments. So why not buy from something that's already established? Why not buy something that's already fit for purpose and that can be useful now as opposed to later on? But that's not the purpose. That is not the purpose. But hold on, we do have, and we have found out what the purpose is. The purpose is to put other people in power and give them a 43% pay rise. Which is apparently Sim Mostyn is looking to receive a salary of $709,000 a year, a 43% pay rise. Being the next Governor General set for a massive pay rise. This is where it's all going. So it's tax the average Joe, tax them more. And give the pay rises to a lot of these people. That's the whole purpose. I can't see anything. That's why we've got that, those two rats, the left and the right, the black and the white, going around, forever going around in circles and spinning the yarn. As I said again earlier on, who's going to fall for it, and what are they going to fall for it before the next elections are called?
Yep, and let's just underscore again, the main purpose of this, of course, is to support the construction sector, who have been very large influencers, directly and indirectly, on political policy for years and years and years. And what I find fascinating about all of this is that the outcomes are more for the benefits of some rather than others. And Edwin, on that front, there was a really interesting thing that came up. I'll just put it up. This is from The Guardian, Andrew Bragg, basically saying, should Australia recognise housing as a human right? Well, the obvious answer is absolutely we should. But he actually goes on to describe the build-to-rent tax concessions and the increase in Commonwealth rent assistance as, quote, a perpetual renting plan. At its heart, it's a corporate housing policy to ensure that a generation of Australians become renters for life. And I actually think that's a really insightful set of comments from two perspectives. One, I do believe that somewhere to live should be a human right. It shouldn't just be for those who can afford it. But two, all of the things that are going on at the moment, and look at it from the government policy and look at it from the tax concessions, it's all helping effectively corporates to make more money out of people desperate to find somewhere to live. And interestingly, the research shows that these build-to-rent properties tend to have something like a 20% premium relative to other rents. So they're not actually build-to-rent for, the average Joe. They're actually for the more affluent segment. So I think this is a really important insight.
Yeah, look, and let's look at it. Let's break it down even a little bit further, Martin. And let's talk about how long is it going to take to build all the required accommodation under the rent to build plans. I haven't seen any rent to build projects that have got freestanding homes or low set or medium density. It's all high. It's all high rise. All the plans that I've seen, now I could be wrong. Our viewers may correct me. Happy to receive a DM and they can show me the plans. They can show me, but most of the stuff that I've seen, most of the stuff that I've discussed with developers and with other colleagues of mine in the industry that actually source development sites for developers to put in place, rent to build, build to rent accommodation. It's all high rise. It's all high rise, and it's in areas where you wouldn't want to build high rise. That's the first thing. The second thing is nobody has come up with a clear plan or definition of how these complexes, which are going to be managed. One thing is managing the tenant inside the unit. Another thing is managing the complex, and we've seen the issues that Net Strata and other strata companies, no doubt, are facing now with regards to maintenance. So the cost of living in these high-rise developments is only going to get more and more expensive. Any high-rise development in the Sydney region, I'm purely talking about the Sydney region, any high-rise development in the Sydney region that is charging strata levies of including including sinking funds that are charging less than $2,500 on average for a 2-bedroom apartment, is not doing not running by the book. In other words, they're not doing things right. Yeah, because of the exorbitant prices that are being charged by maintenance, to maintain just the general the common grounds. So these are the different issues. Yes, you're going to have a lot of corporations, big investment groups that might put a lot of money into these developments, and because they're looking for longevity of a cash return on their investment. The question is it how well are they going to be maintained post 3 years, 4 years? How are you going to deal with the ongoing maintenance costs of these, as I call them now, the Pavlova developments? Comparing them to the tofu developments over in China, because there's a lot of corners being cut, and there's a lot of as I said, high-rise development that are being built in areas, high-rise apartments that have been built in areas that they shouldn't be built in, frankly. But it's all about squeezing more people, squeezing more into less, and you create all sorts of issues with infrastructure. You create all sorts of issues with, obviously, with the roads, with education, hospitals, and the like. So, yeah, I agree with the fact that it is a human right. It should be a human right. It should be seen, and government should be doing a lot more. But what they're doing is certainly not cutting the mustard. As I've been saying for over a decade and a half, the real, in my opinion, this is my personal opinion, and I've written about it. From as far back as 2009, I think it was, where I've said if a lot of the red tape is cut in terms of making it more, giving developers an incentive to build a lot more, and not being taxed the way that they're being taxed. Developers and builders are being taxed on new developments. Well, we've spoken about it in previous podcasts, and there is your answer to the rental to the rental issues, and there's also your answer to the affordability issues with regards to people that want to buy that don't necessarily want to be renters for the rest of their lives, and they want to buy, because more will be built, more would be built, and of course with that comes the state governments have really got to put a stick to the LGAs, and for them to pull the finger out and allow this. And this is what Mince is doing now. He's in the ring right now. I mean, round one, you could say, was won by the local LGAs on points, but he's really taken it to them. It could be a 3-round match, but we'll see by September, by November this year. We'll see who's the champion, whether it's going to be the state government or the LGAs, because of the tug of war that's happening at the moment. And that's interesting to be privy to that in talking to the developers that I've known for many decades.
Absolutely. Well, it's a game in two halves, at least, isn't it? And I think there's more to go there. Although I do still detect a lot of resistance for high-rise development around the place. And particularly, I think, when it's connected to this idea of build to rent. And I also note that some of the build to rent programs were also targeting students. And of course, one of the things that's happened recently is that the government has been talking about dialing back the student intake. And I don't know whether you saw this, but there was actually a report that came out. It was actually on Friday it was released. And it's talking about, well, we need to put more migration into the regions. To which I reply, hang on a moment, you can do that, but there's not much in the way of property that's available to live in there. So what you're doing is just moving the problem. And I actually issued a show yesterday called More Migration Madness, because I made the point there that it's not solving anything. And once again, the whole migration story and pumping the economy is more to do with generating momentum in the way of more tax and more construction and all of those things. But actually, it doesn't solve the underlying issue. And I guess that's the frustration that I've got, that a lot of the stuff that's going on at the moment is just messing around the edge, not really dealing with the fundamental issues. And another bit of interesting take on this, I don't know whether you saw this, but the FIRB, the Foreign Investment Review Board, issued their most recent report. It came out again on Friday, and it showed that there were, according to the official figures, 5,360 residential real estate purchases with a level of foreign ownership. Now, I would argue that this is not trapping all of the transactions by any means. As we've discussed previously, there are all sorts of different ways of going around it. But it was quite interesting that the total value of those transactions were about 4.9 billion. And 82.7% were actually in Victoria, New South Wales and Queensland. New dwellings and vacant land comprised 66% of the transaction. In other words, 1/3 were existing properties. And also the significant proportion were under $1 million. So 78% of residential real estate values were under $1 million. So that gives you a bit of a profile of precisely the way that the story is being told. Now, again, I don't believe that this is trapping all of the transactions which are actually from foreign transactions, but nevertheless within the narrow parameters they're using. And it was quite interesting because Senator Rennick made this post. He actually showed a bit of a breakdown in terms of the different states, but said foreign cash flooding into Australian homes surged by an additional $400 million. New figures showed as Queensland solidifies as the new hotspot for overseas investors. And it includes, China as well as India, Vietnam, Taiwan. Given the level of homelessness in this country, it might be time to put a stop to this, don't you think? So it's interesting how this in turn is another of those political, discussion points. But and I know that the FIRB is not trapping the entirety of foreign investments in property.
That's right. One of the alarming things of that report is the fact that 30% of the properties bought were existing dwellings. That to me is more. That to me is the crux of if a mainstream reporter would get that report and they should do a piece specifically on that. The big question is why? Why establish property being sold to foreign investors? And that's the key word there, is investors. They're not PR holders. They're not Australian citizens or newly Australian citizens. They're investors. So, and this is the alarming thing. And the current government is hell bent on selling more and upping the numbers. Now, we spoke about when Premier Lee was about Premier Lee's visit. And this is where you're going to see a lot more cash coming in, which we spoke about in the last show, Martin, where the WeChat chatters have mentioned that to us. And this is what a lot of people don't understand. Now, I gave a sort of an overview of how it's done one way. There are many other ways that people can bring in money out of let's say mainland China, and this is just basically given the elite of the elites another avenue to bring more money in, because let's not forget that although because there's been a lot of policy against taking money out of China from the CCP, but now this is just another way, the pressure that the elite of the elites have put in there, or the highest CCP members have put on the governments, and this is where now there are many ways that you can bring that can get a lot of that money out of mainland China, where that avenue wasn't available before. So this is where the senator is also alluding, in my opinion, to the greater amount of money that's to come. But then we've also got the silent tigers. We've also got money that left China, mainland China, years ago, that's been sitting in other parts of the world. We've also got other Asian interests that are eyeing out that are eyeing out or have been eyeing out Australia as a safe destination, as a safe haven. We've also got, as we've been talking about for a while now, and that is the new kids on the block, which is the Vietnamese contingency that that they've entered into the golden era, and there's going to be a lot of money coming in from that. Now you've got these countries, Singapore, Malaysia, India, Vietnam, and other Asian countries that are very wealthy favor Australia as a safe haven, as a great destination to park the money. So we're only going to see more to come, and now with opening the doors and that gateway reopening between Australia and China. With Premier Lee's visit not too long ago. So then, it's really people have got to be wary, and they've got to see, and people have got to start paying more attention as to what's really going on. And this is why, in the meantime, the governments are really just creating smoke and mirrors elsewhere, or distracting the people with other nonsensical issues like your nuclear. I'm not saying that that's nonsensical, but it's a distraction at the moment. They're creating a fuss over other things, and they're creating distractions that and we're losing focus on the main need that we have right now is housing, whether it be rental or whether it be something to buy. So this is, and this problem is only going to go. So, but again, it's all going around in circles. It's just the two rats going, the left and the right, the black and the white, going around in the maze, going around in circles, pretending, pushing out announceables to distract the population. And in the meantime, as you said, there's, or the senator says, there's the greater people, more people living in cars, living in tents, not having a place they could call home. I mean, we're not even talking about people. We're not. I mean, some of the reports that I've seen over the last few months. I mean, we're talking about some people that are on 125,000, 150,000 K a year, and they can't get accommodation in areas, and they're somewhat transitioning in between one place of rental to the next until they find the next place of rental, and they're living in a car and using gyms and other facilities to have a shower and the like. I mean, this is incredible. This is third world stuff.
Oh, it is, absolutely. But it is unfortunately getting worse and worse. And by the way, it's not just in Australia. The UK have the same sorts of issues too. Just going back to the FIRB briefly, this article actually made a quite nice summary of some of the critical things. So temporary residents can apply to the FIRB to buy an established dwelling, provided it's used as their principal place of residence and sold within 3 months of them moving out. So that's one thing to note. But the other interesting observation here was that the article focuses on Andrew Bragg saying that the report showed that local purchasers were losing out under the current rules. Shane Oliver at AMP said that the country was failing to build enough homes to meet demand, and that restricting foreign home owners purchasing wouldn't really help very much. But then, of course, other people have a different perspective on that. And, is there a direct link between immigration and policies and purchases? And if the Australian government succeeds in reducing the number of foreign students and other migrants coming to the country, we can expect foreign buying to be affected. So you see just how much this touches on many of the major issues. But in a way, it is a bit misleading because and I know that there's other way around this at the moment. But the bottom line is that we just have real pressures on so many people now. And what that basically means is it's really, really hard to get into the market. Even if you've got money. There was this article actually from the Herald showing that there was a debt-free borrower here earning $100,000, struggling to secure a $500,000 loan in Newcastle. It's really, really difficult now for many people. And I see this in my surveys too, that more and more people, frankly, cannot get into the market unless, of course, they've got help from the bank of mum and dad or, grandparents or whatever. So this is a real big situation to sort of get understanding. And yet, some of the reports are still saying, well, you ain't seen nothing yet. We're going to see continued rises in terms of property prices. The KPMG Residential Property Market Outlook for June 2024 suggests that the price growth will be 5.3% over the next 6 months, followed by 5.6% over 2025. So it's not over yet. And also talks about the fact that the rental sector could see rents rising by 5% nationally over the next 2 years, a bit slower than where it's been. But essentially, home prices are heartbreaking. Really, Aussie property prices are like Heartbreak Hill. They just keep going up. And even when you get to a flat part at the top, you head around the corner and there's another incline. And then they link it back to property growth and population growth, I should say. It's a never-ending story of pain and discomfort, and unfortunately, the government policies are not really getting close to tackling any of the critical issues that need to be done. Obviously, migration is where a lot of the story needs to start and end. And again, going back to my show, Migration Madness, I made the point that what we should be doing is getting migration linked with the ability to build. So we're not actually putting yet more pressure on the housing sector. But your point is absolutely right. Even if you did that, you've got a 5 to 10 year catch up required just to get to, a sensible balance point. So there are no significant initiatives that are actually going to solve any of this. And that's the real concern I've got. So, a lot of, as you say, spinning around in circles, but nothing really going in the right direction to solve this problem, which means, of course, more people are going to get more into more difficulty. And by the way, it's worth noting, Edwin, that more people are now suggesting that maybe the cash rate will have to go higher rather than lower. Nobody's really thinking that there'll be a cash rate cut this year, and we could be up to 5% maybe next year before it comes down. Now, that is a very significant impulse on those people with mortgages, and more people, of course, are getting caught. And in fact, there was another article which I featured in another show saying that 1 in 8 mortgage borrowers now are extending and pretending. So they've basically extended the length of their mortgage, and that means that their monthly repayment drops just a little, but they're paying thousands and thousands and thousands of extra dollars to the banks over the life of the mortgage, which is on typical 5 years more than it used to be. And of course, we know that the typical first-time buyer is now in their mid to late 30s rather than the mid to late 20s previously. So it's a mess.
Yeah, look, going back a few steps there. The first one is, look, if you're struggling if you're not cutting, if the job that you've got and you're not, it's not cutting the mustard to enable you to borrow the extra money. Here's a pointer. Apply to become a public servant, or better still, get a real estate license / become a politician. Go back. There's got to be a course. Some private RTO will be providing a course on how to become a politician. So that's my take on that, because you sure get a loan for 3 times the amount. No questions asked, because you got a job for life, right? The other one is with regards to the immigration and what they're saying about pushing the new migrants out into the regions. What's that going to do to the region? I mean, we're basically shutting the doors on regional towns, where we've taken away banking institutions, we've taken away, which then takes it's into the infrastructure that's there, because then businesses are depleted. You've got a lot of these country folk basically rely on cash, rely on that banking institution there, because it's an aging population as well. They're not up to date with the IT, with transactions online. Is it secure? So you've got those issues, right? But this is the biggest thing, Martin, and this is the crunch, right? Is you've got a government that is saying, look, if we pull back on foreign students because they're the ones that basically bring money in to buy property as well, and and they can buy the established properties. But as long as they sell, once they finish the courses, the degrees, they sell the properties. The properties then get put back onto the for sale ledger. But see, this is the problem. What did the government do that you and I reported some time ago, when again the WeChat chatters were ahead of the curve? What did the government do? So if you after you get your bachelor's, you're allowed to stay 2 years to work. So in other words, you can stay in that secondary dwelling for an extra 2 years once you get your bachelor's, right? Once you got a master's, then the tenure went from was 3 years, and then a PhD was 4 years. And what did the government do around that policy? They doubled the tenure of the people that can, how long they can stay post their degrees. So we went from 2 years to 4 years, from 3 years to 6 years, from 4 years to 8 years. And this is in my view the idiocy or the lunacy of so it's you get given an announceable on the left hand, but they take it away from you on the right. But this is what people don't really understand, because they don't understand the stuff that we share on the Monday evening property rants, and we keep our followers and viewers up to date with, and that is the policy around around education and what happens post obtaining your degree, and how long people can stay legally, and work. So this fanciful idea that the students, the newly graduated students from tertiary education, that the fanciful idea that they're just going to pack up the bags and go back home is a fanciful idea. And it's a fanciful idea. It may have worked in the past, or may haven't, but the new trend is nobody wants to go back. It's run away, run as fast as you can from China. If you're here, if you're outside of mainland China, you don't want to go back. To go back, you go back into the to Tung Ping, to lay flat, to do nothing. You become a part of the last generation, where you've got to basically be occupied with your with WeChat wallet, Uber Eats, or whatever else you get served at home. You got all these things because everything else is because you'll never own a home there, regardless of the fact that the market there is plummeting in a lot of the second tier cities. But the young people are saying we can't afford. So nobody wants to go back. But the government's made it easier. So see my point, Martin? We're just going around in circles. We're just going around and around, and it's all this announceable. So you're getting it you get given it from the left, but they take it away from the right, or the right gives it to you, and then the left takes it away. So there you go. There's the breakdown of that, of those policies, or those fanciful ideas that the state government and federal government have around solving the housing issues that we have. But let's not talk about the current immigration policy. Let's not talk about that, right? Because that's taboo. We'll get deplatformed.
Well, yes, it is always an issue, of course. But look, there are levers that could be pulled. Clearly, the gas market is broken. Energy prices are way too high. We could actually bring energy prices dramatically down if you actually reserved gas. And I reckon that you could create somewhere between 50 and 80 billion a year if you actually charge the gas companies what they should be being charged. That huge amount of money would actually help to potentially catalyze the construction sector significantly. The other thing is that if you actually get migration back into line with future demand and things like that, that would be quite good. The point is, there are levers that could be pulled, right, if they were really serious about tackling the current situation, but they're not. They're not. It's clear to me that they're not. They are wanting to be seen to be doing things, we said announceables, but they're just fiddling around the edge and running round and round and round and round. And just on that, you mentioned the WeChat chatters. This was a fascinating thing that you threw my way. Again, on the WeChat chatters, right? Oh, it's all good. Significant rate cuts, optimism in property. So once again, more reason to purchase.
Yeah, well, this is okay. This is now. I know some are thinking that the rates are going to go higher. Maybe they will, maybe they won't. I mean, we don't know, right? We can only speculate, and we can only gather in as much information as we can. This is what the WeChat chatters are talking about, and obviously, what the WeChat chatters are talking about is going to influence certain markets in the Sydney region as well as the Brisbane region, and they want to really push for the WeChat chatters to get reinterested in the Melbourne market that's been somewhat on a downward trend. So you've got Samir Chopra from the chief researcher from CBRE. He's on a recent conference with the Real Estate Institute of Victoria. Said that he believes that there could be anywhere between 8 and 10 rate drops over the next 2 years. Now, your old flame, Nerida Conisbee, good mate of yours, didn't rebut that. She says that, look, 10 rate cuts is optimistic, but she possibly sees between 25 and 26 eight rate drops, following the global trends. So with this in mind. And again, this is something that's been discussed and been reported on the WeChat chatter on Tencent, and obviously articles from different parts of the mainstream and they put this together and formed their own articles. But this is what they're talking about. So again, the WeChat, based on this, the WeChat chatters are simply saying for the Sydney region, specifically talking about for the Sydney region, they're saying, well, look. Going through a bit of pain, even if there is, and these are the local chatterers, the local property investors. If there's going to be even one or two, it doesn't really deter them from chasing the investment properties. Because as you and I know, and what we've shared with our followers is they look at this from a different perspective than what your traditional investor looks at properties. A traditional investor will look at a 3-bedroom home and then plonk in a 2-bedroom granny flat at the back to increase their yield. They will get a 3-bedroom home and plonk in a 2-bedroom apartment and turn it into a 15-bedroom paradise. To get the rents in cash. So this is it. So for them, Martin, and let me say this, that the silent tigers aren't too far behind with really moving into the market investing. A lot of silent tigers are looking at putting the super into investment properties. They're not trusting the banking institutions. They're not trusting the fund managers, the properties that go. But can you blame them? Can you blame the local chatterers and the local silent tigers when you see parts of the Western region, parts of the Western Sydney region around your Blacktown LGA go from 6 months ago, you could buying properties around your Kings Langley, Trailer Park, Layla Park, and those areas for under $1 million, and now you're paying upwards of 1.2 for the same, if not inferior property. This is the crazy stuff that goes on, and this is why we keep the. So it's not about whether I believe the rates are going to go up or rates are going to go down, or whether you believe the rates are going to go up or go down. It's just a report, and so that people that are looking at buying or preparing to buy, they know what the competition they hold. I mean, in other podcasts, in other videos we've shared on certain areas where the WeChat chatterers historically have been very, very strong in buying because of their approach to the lifestyle and the community. You've got your Eppings, your Cullingfords, your Talopias, your North Rocks now. So all these markets where they've been focusing to live in, but now you're looking at also the movements and as to what they're looking at in order to invest in, because so that they can create around your different ethnic groups and where whether it be chatterers, whether it be people from other ethnic backgrounds, that will participate in your budget accommodation in terms of will rent a room from these investor class. I haven't come up with a word for them as yet, but these private lettings. So this is what they're talking about. So they're not phased what's going to happen over the next 6 months. And they're saying, well, just simply, they're still going to be active, very active, but they're still saying, tread with caution as to what you buy and where you buy. When they say that, it's more, you look at more your ethnic centered regions as opposed to your traditional regions where the dominance is your normal rental markets that are being managed by licensed real estate property managers.
Yeah, it is interesting. And I want to just reflect on the fact that we are taking effectively indications of future interest rates from those in the property industry. Just think about that. So they are absolutely paid for spruikers for the property industry. So of course they're going to say interest rates are going to come way, way down. I mean, that's just natural, it seems to me. And, I get a bit frustrated. So here's another one. This is actually from Western Australia. So, clearly there's been a strong momentum in Western Australia, and investment lending has grown significantly. According to those ABS figures, Western Australia saw the biggest growth in investor lending of any state in Australia over the past year, up by a significant 71.6%. But then I look at the expectations. So Perth's median house price tipped to reach a record high of $856,000 in 2025, according to Domain. Domain's Chief of Research and Economics, Dr. Nicola Powell, said WA's strong population growth, slow building approvals, high construction costs, and limited supply will continue to drive up house prices over the next financial year. Now, that may or may not be right, but my point is these people are actually connected to the property industry directly. So to what extent should we be relying on their view of what's going on? And my view is, well, there's some arguments to suggest that prices will continue to rise under certain circumstances, but I can also see other scenarios where prices could not rise as strongly. I just want to get a more objective view than perhaps is being reported. This, of course, is then reported in the property portals. It's also reported then in the mainstream media, who amplifies these same thoughts. And so, not unlike the WeChat chatterers who actually see the same information and then make decisions, other people are making decisions too. The question I have, Edwin, is to what extent are those decisions based on reality or based on something less than reality, hopium?
Yeah, well, again, on that, Martin, is not what you and I believe, but you see the movements. You see the trends and how they set the trends, and how long before they trend the trend, whether be right or wrong, whether it's reversed. What all I'm saying is this is what the WeChat chatterers are doing. This is what we hear them doing. This is what we see them doing. This is what the silent tigers are doing, because myself and my team, we're competing against a lot of the WeChat chatterers in the areas that we're looking for property for clients, and also for silent tiger clients, and now the new extension of the new kids on the block. We're also looking at how that is evolving. That's just then people, our followers, our viewers, have got to make up their own decision. But one thing for sure, mate, is that in a number of markets with the agents that I've been speaking with, licensed real estate agents that are currently selling, that are managing licensees in charge that are managing 3, 4, and 5 offices, or have ownership over 3, 4, 5 offices. There's one clear dynamic that's happening in some of the Western region, and that is that the buzz or the drive that they were seeing 3 months ago is certainly cooled down a little bit, tapered out a little bit. And the discussion that we had with one of the groups this morning, that I had with one of the groups that I regularly get together with this morning, was basically when I asked them with regards to the stock that they have on market, I said, look, let me ask you a question, because this is my observation: is you've got a house, or the properties that are for sale in your patch, that the vendors are looking for 1.3. You're saying that the expectations are high because other properties have sold in the past for 1.3. But my observation is that those properties, these new properties that have come on the market from properties that were being sold 3 months ago for 1.3, the big difference that I've seen is that the properties that want the 1.3 price tag from properties that got sold 3 months ago at the 1.3 is they are of inferior quality. In other words, they still need $150,000 to $200,000 of renovation work. And this has been my observation, my team's observation, and other agents that I've spoken to as well from other regions and other patches. They're saying the same thing. So obviously, the vendor's expectations, because agents are desperate to get the business, they're overselling the value of the property, and then when it hits the market, the excitement in certain parts of Sydney, not all, but in a number of parts of Sydney, they're not getting the traffic through because people are noticing that the properties are a lot inferior. And this is what you and I said many months ago: beware of what's going to come on the market, what's being dumped on the market, and people are going to dump into that frenzy, that people are going to dump their old investment properties or properties that require a lot of work, that have been just prettied up cosmetically, but there's only so much lipstick you can put on a pig. And the reports that they get along with the property, the vendors' reports that are provided along with the property, are not the true valuation or the true condition of the property. That's the unfortunate thing that we're in. That's the time that we're in at the moment. This is where people have got to be very cautious. So the local buyers, yes, in certain parts, certain markets, that demand has dropped somewhat. But the unfortunate thing is, Martin, that at the end of the day, even these as you say, these dogs are still selling. They may take a bit longer to sell, but they're selling. And it's interesting to also understand who's buying them and why they're buying them. And we go back to the budget accommodation. We go back to areas that are predominantly of a certain ethnicity, and they will participate in renting a room in a house that's been cut up into multiple rooms.
Absolutely. Well, we are in interesting times with regard to the markets. I saw this headline in realestate.com saying jaw-dropping mortgagee sales now on the market. Millions of dollars worth of homes across multiple states have been seized for resale by mortgagees from luxury designer houses to stunning beachfront properties. Cashed up house hunters looking for the next home and investors looking to capitalize on mortgages gone wrong have around 30 properties to explore off public listings by mortgagees on realestate.com.au. So there is another side to this as well. We are certainly seeing some properties coming back on the market quite quickly, and in some cases, at interesting price points. But what I find fascinating is a lot of those are actually in the more expensive set at the top end of the market at the moment, which is something which we quite often see because the top end of the market tends to wobble first. But you are right also that there's still significant demand further down. That significant demand is definitely not going away. And a lot of those transactions that you're seeing are precisely those where, let's knock a few rooms together and create, multiple occupancy, generate a lot of income is clearly part of the story, and that's pushing a lot of first-time buyers out of the market completely. Now, there's one thing else I want to touch on before we come to the data on the latest movements in prices and things, is that a lot of the information I'm seeing is that councils are really getting squeezed. There is actually a lot of state debt building at the moment, and whilst the federal government is saying, oh, well, we're going to manage the budget responsibility, actually the truth is, if you look at Victoria or New South Wales, the state debt is ballooning. Councils, though, are also under the gun as well, as you've been noticing.
Yeah, this is the thing. Like, I mean, when the old saying is when the fat cats are getting fatter, and it's up to the taxpayers to pick up the tab by hook or by crook. This is something interesting. I've been talking to some inspectors, in different parts of Sydney, and the common thread in the conversations that I've been having with a number of them is that they basically the council is broke. They're on a mandate to go out and bring in revenue. One of the councillors, I won't mention the LGA, that I spoke with today, an inspector, he's got his words this afternoon to me were, we've almost raised close to $300,000 in fines for illegal tree lopping. I mean, it was fascinating just listening to him today. And I've also talked to other people, other councillors in other areas. When I go and do my research in the local council chambers for to see whether or not properties that our clients are looking at have got the extensions that are council approved or not, or this or that or the other, right? So this is where I've gathered my information. But today's conversation was absolutely fascinating. I mean, he places a dollar value to every tree, and you could say that he also places a dollar value, a monetary value on every branch of the tree, because people are getting even fined for lopping branches that are overhanging neighbours' properties because the neighbours have complained, blah blah blah, this and the other. But they go ahead and they think they're doing the right thing, and they start lopping the tree down. And next thing you know, booyah, they get a fine in the mail for performing an illegal operation. So it's rather fascinating. Now, the other interesting thing that he mentioned was that there's two cases, with this LGA has with what I could imagine would be a developer, because nobody else would clear or developers, nobody else would clear big blocks of land, and literally they're in the courts, with all up potentially they're claiming $200,000 because of the trees that got chopped down to clear the land for this development. So this is interesting. Now, in other parts of Sydney, there's a blitz on parking. As we used to call them when we were young, I don't know what they're called now, but we used to call them the brown bombers, are out in force. And they're out, and you only have to go to that LGA. You only have to go around the shopping centres of the LGA, and you don't see one walking the streets. You see they're in groups of three. So I figured, before I would see one walking the streets, walking the beat of a couple of blocks, but now and if there's three, shit, how many fines are they writing up? How many booklets are they are they filling up in order to, and have they got a quota? Are they running on a quota? Is it a commission-based job? Because if it's a commission-based and you get a certain percentage above your quota, hey, I'm all in. Dusty and I want to take up that job. But this is it. So there's a blitz. So beware of what you're doing, what you're going to do, and where you're parking. I think our viewers will know with the LGAs that I'm talking about, where they would have seen over the last 2-3 months, double if not triple the amount of brown bombers out on the walking the beat. So So basically, bottom line is the common thread is there's not enough coming out because the fat cats are getting fatter and they're getting pay rises, and somebody's got to pay for those pay rises, right?
Well, that's right. And I've had experience quite recently seeing some of the local authority fees and charges going up for all sorts of things, day-to-day services. And I also believe that some of those patrol people are actually on definitely on targets, if not commissions. Let's move just briefly then to talk about the property situation. I thought this was a good way into it. According to Tim McIntyre, real estate editor, 3 million average house prices could soon be a reality. The property market is slowing, but in many cases, Aussie house prices are crash-proof. That's why the real estate boom is never really over. So there you go. That's what the real estate agency industry believes. It's never over. It's a one-way street. Prices will only ever go up. Which may or may not be true, but it is worth then just sort of checking in on, well, what's really going on with the data, right? And so if we look at the listings in Sydney, on the 17th, there was 16,262. If we jump forward to the 24th, 16,324. So a small rise. If we then make a comparison between the listings this year and last year, you can see that listings are actually still significantly above where they were at this time last year. But just by way of comparison, back in 2022, there were 18,993. So you can see that it's all relative. We still have essentially smaller numbers of properties on market, but the quality of those properties is continuing to deteriorate.
100%. You've hit the nail on the head. This is where our viewers and our followers need to hear with very, very open ears, and that is you've got to do your own research. You've got to get your own building and pest inspection reports, and don't rely on your before you bid reports. They are not even worth putting in your outside dunny, to be used as reading material or anything else. They're just not worth the paper they're written on. And this is important because there's more properties coming. I know quite a number of properties in different parts of Sydney. There's one in the Blacktown LGA in Kings Langley that got bought. And I know the family. I've actually been in the house. They called me in to help them to suggest what they could do about it. And that property is now back on the market. It only got bought. It only got settled 3 months ago, and it's back on the market because you can't. There's too many issues but they got. They were riding that emotional train. They had front row seats of that emotional train, and they got caught up in the whirlwind in that slipstream of the auction, and it's an unfortunate position to be in. And this is where people have got to be extra careful. There's others that we've shared on that, in other parts of Sydney where they find out all sorts of nasties post the purchase, and that's when you find out it's post the purchase, and then do you sue the building inspector? Do you sue? Who do you chase? There are now, as we've shared in the past, also that in the Blacktown LGA, there's 3 properties that have more or less been given the demolition orders because they don't believe in reverse DAs, and 2 of those homes cannot, even if you reapplied to get a DA, if that was a thing in Blacktown LGA, they're not going to give it to you. And you couldn't obtain it anyway because it just doesn't come in within the scope of works that you can obtain a DA under by legal means anyway. So they got demolition orders, and people paid premium for it at the time, and because they were all polished up, and the reports didn't pick any of that up. And this is where people have got to be careful. This is the time more than ever that for people to be careful as If we're going to get closer to the $3 million average price point in the Sydney region, more of a reason why you can spend a few more dollars on doing the research before you go out and commit.
Absolutely. Yeah, well, due diligence is absolutely critical, ever more so, I think, at the moment. Just quickly looking at the Melbourne story. So listings on the 17th were 26,741 in the Melbourne region. Jump forward to 24th, it was 26,833. So, another small rise, and still significant numbers of houses on market in Melbourne. Still more coming on. Also, again, from ex-investment properties. I've seen a few articles on that and spoken to a couple of people over the last week, which we know that's to be true. Up in Brisbane, on the 17th, we have 3,362 and 3,514 the week later. So you can see then that still the total volume in Brisbane is quite low. And if we stand back and just look at the auctions, well, guess what? Victoria is still leading the way at the moment. No surprise there, really, Edwin. No surprise.
No surprise. Victoria's leading the way in what people wanting to bail out, and leading the way, and also in land sales. The land sales, in comparison to Sydney, is just a bit over 4,000 blocks of land for sale in the Melbourne region, and in the Sydney region, we've got only just a tad over 1,000. That's an interesting thing. Nobody wants to build there in Melbourne, in Victoria. I mean, and I think we've raised a lot of that, the concerns about the construction industry and how it's going. It's falling over, and trade is going broke, because builders are going broke and developers are going broke, and they're just not getting paid. It's interesting times, mate. It really is interesting times that we're navigated into, that we've been pulled into. And it's only going to get more interesting, because there's a lot more things that have got to break before people are going to wake up and look for real solutions, as opposed to the band-aid solutions that have been thrown at us for the last 2.5 decades.
No, I agree about that. And, we showed you there another report on traders falling over, the ASIC data that we discussed recently. Shows you that it really is, pretty shocking. More traders are finding it more and more difficult. Interestingly, some of the bigger guys are hanging in there now, but a lot of the smaller guys are falling over because of the previous set of failures. Those big companies didn't actually pay the traders. The traders now are actually finding it more and more difficult to hang in there. So it is really, really tough. And interestingly, I was talking to someone the other day who was trying to get traders in to do some work, having to offer huge premium just to get them to come in, because there's just not enough out there. So more pain ahead. Just on the rentals, just quickly, we'll look there. In Sydney on the 17th, we had 12,413 listed. Jump forward to 24th, it was 12,672, a slight increase there. Compare that with Melbourne. On the 17th, we had 10,506, and that jumped. So a small rise. But again, we know that rentals are under huge pressure, and rents are still going up. I was talking to somebody the other day who's had again a 15% rate increase in their rents for the next year, but with a prospect of another increase next year. So it's not even every 3 years, it's sort of, every year. So it's madness, which just, basically shows you that we are in this stupid world where, in fact, the property market is not working for ordinary Australians. It's working for the big fat cuts. It's working for the corporate construction industry. It's working for, in some cases, politicians who can say, well, we're doing stuff and trying to win brownie points for doing stuff. But ordinary Australians, whether they're in the rental sector or in the purchasing sector, are being caught left, right, and centre. As we come to the end of the show, Edwin, you've just got time for your tip of the week. And again, this is a biggie.
If you recall, if our viewers recall, we've been sharing, and I've been keeping tabs, obviously, because of the renovation works that we help our clients to do, and a lot of it comes around the bathrooms and kitchens, and we raised the point, and we were ahead of the curve. DFA was ahead of the curve with regards to the mandate around the engineered stone, and back then we said, watch this space. Obviously, because they want to get rid of the silica side of things, that get put out when they get put out, because they're not cutting the element properly. they're not wet cutting it. They dry cut it, creates a lot of dust, and obviously then you end up with all sorts of breathing issues. Not a bad thing to do, but however, what we are now is we've entered a phase, Martin, where many people are going to be caught up, and I dare say many people have already been sold the underperforming new stone that's already been imported that has that level of silica that is approved by the Australian standards. But the unfortunate thing is as we shared before, is that it's a lot softer. A lot of kitchen manufacturers are obviously looking for other alternatives, such as your natural stones, are more expensive, but that's they're gonna be pushing more for that, and the clients are gonna have to pay or take the risk of getting this underperforming engineered stones. But what's happening right now, whilst we're making that transition, before the 1st of July, the cutoff date, is a lot of people are being sold because the older stone, the older engineered stone, the slabs, you could say are worth their weight in gold now. But in the newer slabs, they're being sort of somewhat frowned upon, and they're coming at a cheaper price because they can import them in volume. Now, being engineered, being man-made, they can come up with the same pattern. So you wouldn't be able to tell. You and I couldn't tell, which is which. But obviously, people in the industry, they know. And what they're telling me is that some kitchen manufacturers, some people that are supplying kitchens, they are mixing the stones. They're mixing the new with the old, selling at the old price, the premium price of that is available, but mixing it with the new, and people are paying premium prices, and they're every week. So if they give out a quote for a kitchen, before you'd get a quote for a complete kitchen, including the bench tops, but over the last 6 or 8 weeks, they'll give you a quote on the cupboards, on the carpentry and installation, and the quote on the stone is a second quote, and that quote can differ from 1 week to the next. And the other problem that they have is, obviously, if you're chasing the older stone, which is a lot more stronger, a lot more durable, it's been tested for quite a number of years now. That may or not may be available. You may or may not have. Your average kitchen will use about 3 slabs. So if you've got a more fanciful kitchen, you've got your sides or your waterfall features on the side of the islands, that people have. Obviously, you could be up to 4 slabs, and you may not necessarily get that from your supplier. And if you do, you got to be careful whether or not what it is. But people are paying premium, so prices are just going through the roof. But I don't know what, I guess because we work with kitchen manufacturers ourselves, we work with people in the know. We're relying on them, and we're trusting them to that give us the right information. And because we've had that relationship for a number of years, we trust them. But if you're just buying one kitchen, who's to say what you're going to get, and who's to say how it's going to perform? But yet, the unfortunate thing is you're paying premium at the moment, and before the full transition happens, I don't think people are going to be flogging on the side, even post the 1st of July, because I know a number of stone wholesalers that have amassed container loads of the stuff before. Obviously, they were preparing for this, because now they can charge premium prices, and that's going to be worth a lot of money moving forward. But I don't know what the government's going to do. I don't know how it's going to allow this transition to happen. But all I can tell you is that if they come to your front door and they're wearing a long black trench coat, and they open it up and say, "Do you want to buy bench top? Or do you want to buy a watch on this side?" And they got a bench top on samples of a bench top on that side. Be careful. Be careful who you're dealing with.
Well, yeah. I mean, the fact is, you won't necessarily know what the quality of the stone is because it's so variable now. And you could well actually have a mixed job where you've got some old and some new, and you're paying premium prices for stuff that isn't premium. So again, it's worth making sure you're dealing with a reputable provider and supplier rather than somebody who just turns up on your doorstep, I think. But and again, another engineered problem.
100%. Yeah, like that.
Well, Edwin, I enjoyed the conversation today. Thank you very much for taking us through all of the headlines there. And I look forward to doing it all again next week because you know and I know the madness will continue.
Oh yeah, the madness is going to continue. So now we've got three short things in life. Death, taxes, and government madness.
Oh yeah, and the greatest of the three is the third. I think. See you next week, Edwin. Take care. Bye bye.
All the best, Martin.